Okay, yeah, like I said, thanks for joining this session. I hope it will be of some assistance. Consolidations is a very recipe-like topic, as we've already started to explain in some of the previous sessions. For those of you that haven't been here from the beginnings, the beginning, they are busy uploading the recordings onto the server and making them available. I will communicate via the WhatsApp groups when these recordings are available. Moving on to the notes for the session. I'm not going to go through everything again. Guys, this just to emphasize, it's a participatory session. The more questions you ask, the more answers I can give. There's actually 3 questions. You're going to be doing it with me. So I'm going to give you some time to complete, and then I come back online, and we will deal with your answers and everything that we need to participate in. Please make it interactive. It will benefit you at the end of the day. Point number 5, there's a voluntary WhatsApp group. If you send me your module code and your name, please, both of that information, the module code and your name, to that cell phone number, excuse me, I will add you to the WhatsApp group, and you will get all the notes that I make every evening. The moment I'm done, I usually share them. We have only been explaining up until this point, but from now on until the exam, we are going to be doing lots of questions, since consolidations is a lot of, not repetition, it's a recipe, but I want you to understand it, because then you can do any question, or you should at least achieve the 80% mark. And I know I sound like a typical high school teacher when I say that, but with consolidations, that is the fact. Once you've grasped the major point, you can really tackle any question and get most marks. But to get to that point of self-confidence, you need to practice. And unfortunately, as every type of question with accounting, practice is the key to passing the exam. So please send me your module code and name to that WhatsApp group, and I can communicate with you. Then one-on-one consultations have been launched. Well, it has been there from the beginning, but it's now launched through the UNISA platform. So how it works, UNISA did send out an email on how it works. If you didn't get that email, please send me a request to that WhatsApp number. I'll forward your student number to the relevant UNISA administrator, and you will get that the link to the Teams platform, where you can log your query. I then receive it, and then I schedule a time with you. To make sure that I get it fast, best way, WhatsApp. You have to go through the platform, but you can WhatsApp me. I will then go to the platform and link your request with the information that I will upload, and then I'll send you a consultation form. You just sign it, and the only requirement, we must be very clear on what it is that you want us to cover in that consultation. That's the main prerequisite. If you can be clear on you are struggling with X, Y, and Z, and you would like to go through that in that session, then it's me and you in that session, and you can ask any question on those topics, and I will send you the notes after the session as well. Then point number 11 and 12, guys, please post your student number in the chat section on Teams, as well as please complete the attendance register, as well as the session evaluation form subsequent to the class. I just want to make sure that the register has been posted. If it's not, then I will quickly post it for you. I don't see that it has been posted, so let me quickly get it for you. Posted the attendance register. I just want to get the evaluation form and also post that. Then we know everything has been sorted on the admin side. Okay, so guys, yeah, please complete the attendance register as well as the session evaluation form, and then please also post your student number in the chat section. I'm just getting up the next slide, and then we will continue. Okay, guys, as I usually do, I'm just going to give a short explanation of what it is that we are trying to achieve with consolidations. Ask questions. This is your session, and the amount of benefit that you're going to get from it really only rests upon your interaction. The more questions you ask, the more answers I can give or try to give. So before I start, are there any questions in terms of the admin sides of things that I've just explained? On the one-on-one consultations, the WhatsApp number, anything on that front? Nothing, 100%. Okay, guys, as I usually explain, just as an introduction, when we do consolidations, there's always two companies involved. There's a company A and a company B. I think the most important thing that you need to remember is that company A is a completely separate company to company B, and company B completely separate to company A. The only thing that links them in a consolidation scenario is if A, the holding company, has got 50% or more interest in B. In other words, it controls B. The only thing that then needs to happen is that there's a separate set of financial statements that needs to be drawn up. So A will have its own annual financial statements, B will have its own annual financial statements, and the group will have its own set of annual financial statements. So this is what we will be working with. So we need to prepare that set of annual financial statements. So main concept that we are going to be practicing throughout this entire semester, or what is left of the semester, is how to deal with intercompany transactions. Because they will always be, there's a reason why A acquired shares in B. And sometimes it is not just purely because of the profit. We want to eliminate competition, or we want to strengthen the supply chain. So company A might be supplying wood, company B might be making furniture, and together they can sell to the public directly, or whatever the case may be. So in this case, competition is not eliminated, but costs are more controlled because A can now sell directly to B. But that is an intergroup transaction. And what we cannot have when we prepare the annual financial statements for the group is intercompany profits. So we will always look for unrealized profits or losses. So if I can just emphasize, and I know some of you might have heard this now before in previous classes, but if I can emphasize the fact that we are here looking at three different set of financial statements. A, B, and AB. So three different set of financial statements. When you look at the group, AB's financial statements, the group F's, you cannot owe yourself money, you cannot have an investment in yourself, and you can't make profit with yourself, or you can't suffer losses with yourself. So that is the main principle. So we need to eliminate it. If it happened in a prior period, we need to go and eliminate it out of retained income, because where would prior period profit and losses have gone? To retained earnings. So always think, where does the profit lie? When does something realize? So we're talking about unrealized profits needs to be eliminated. But when does it realize? Something realizes when it is sold to an outside party. In other words, the moment that that asset on which we made a loss or a profit, or the inventory on which we made a loss or a profit, leaves the group, we are selling it to an outside party, then only does it realize. So as I've explained in the previous session, if A produces a product that is 5 Rand and his seller sells it to B for a profit of and for 7 Rand, we are talking about 2 Rand unrealized. Okay, the moment that B now sells it to an outside party after he has done whatever with it for 10 Rand, then we can realize the 2 Rand, because then we are no longer making a profit within ourselves. Any questions so far? Because this is the main underlying principle of consolidations. What happens if I sell an asset? Makatani.
Yes, Charles, I wanted to ask, when you sell to an outsider for 10 Rand, that's when you only realize 2 Rand. You don't realize the other 3 Rand.
No, because remember that 3 Rand was never unrealized. That 3 Rand immediately goes to
Realized.
It immediately realizes.
Oh, okay. Thank you so much. Well explained.
So only the 2 Rand. That 2 Rand will remain within the group because you can't make profit in yourself. So that 2 Rand will stay in the group as if it did not happen, if I can say it like that, until you sell it to an outside party, because then the group made a profit of
3 Rand.
5 Rand. The group then made a profit of 5 Rand, because initially that item only cost 5 Rand. But now we are selling it to an outside party via whatever company B is doing to it. Company B might be adding cushions to a chair that company. So say for instance, company A made the wooden frames. Company B does the upholstery. So the total profit that the group made was the 2 Rand between A and B, and then the 3 Rand between B and the outside party. So the total profit is the 2 Rand and the 3 Rand, not this line, sorry. Does that make sense?
Yes, it does. Thank you so much for explaining.
100%. Any other questions on this, guys, before we go to a question? Something that I want to pause on, because we're also going to, there's whole, and all of these things that I'm explaining now, they're separate. What makes this module for me so well structured is that all these things that I've explained to you here in a nutshell, they've spent an entire study unit on. What if this scenario happens? There's a study unit. What about this scenario? There's a study unit. So that's why it's so important to very methodically work through each study unit and build your knowledge and understand and realize that there's a recipe towards this. And then you will understand the principle. And again, that's the skill. You need to understand the principle of what's going on here. Let's talk about assets. So assets, you have 2 types of assets. You have assets that can be depreciated. Please don't laugh at me if I make spelling mistakes. And non-depreciated depreciable assets. When we look at depreciable assets, so why is this a thing? Why are we even concerned with depreciation at all? Let's sketch the same type of scenario that I just did above. Let's say company A sells to company B an asset. Okay. The profit that is made here is 600 Rand. In other words, A, in its own set of annual financial statements, will sit with a profit on the sale of asset of 600 Rand. B will sit with an asset that is worth whatever the original cost price was plus 600 Rand. Agreed? Let me not use X. Let's say the cost to B will be the original plus 600 Rand. So that is what the asset will be valued in company B's books. Everybody still happy? But the moment that we are now talking about a group, if this is now a group, it means that that 600 Rand should not have happened because we cannot make a profit in ourselves. If the group wasn't there, perfect. 600 Rand profit in a original cost plus 600 is what the asset will be worth in company B's books. Everything is still fine. But the moment that we have a group, we cannot make a profit within ourselves. So the entire 600 Rand is unrealized profit. And how do we get rid of that? We either get rid of it. So how do we realize? Any suggestions? How do we realize that profit? We already showed how we can realize the profit of inventory. There's an unrealized profit of 2 Rand. We sell it to B, so B's inventory is actually overvalued with that 2 Rand. However, B adds its profit and then goes on to sell that product for 10 Rand to an outside party. The moment that that inventory leaves the group, we can realize the profit. I'm going to go back what I just said. The moment the inventory leaves the group.
So we'd need to sell it. We would need to sell the assets to an outside party.
Yes, that's the one leg, but with assets, we have an additional choice. So sale, definitely, or use.
Oh.
If it's a depreciable asset, we are going to use it. Well, even if it's a non-depreciable asset, it's going to use. We are going to use it. So that's how we will realize it. So the moment if we say we have a depreciable asset and we realize it through use, what if the put yourself back in there is no group, okay? Put yourself in the shoes of B. What would B have depreciated? Company B would have said, let's say, depreciation for company B would have been the original cost, or let's say cost to A plus the 600 Rand. Agreed. Times the depreciation rate. Everybody happy? That would have been the case. But since there's a group, it means that I am actually in company B writing off more depreciation because of the 600 Rand than what I should have. So in addition to the unrealized profit with inventory, I now sit with an additional component under assets. I can only realize the full 600 when I sell it, or that 600 Rand can become smaller and smaller and smaller as the asset loses value over time due to depreciation. So every year, as I depreciate my asset, I will realize a portion of that 600 Rand. Does that make sense? Don't stress about how we're going to do it. We will get to that. We are going to do the journals and we are going to do the accounting treatment and all of that. I want you to understand the principle. Is everybody comfortable with the principle of that 600 Rand being written off, or the unrealized profit of 600 Rand being reduced annually or realized annually in parts? Lena?
Yes.
Thanks, Linda Kile. Makatane?
Yes.
Okay. If it is through sale, it is the same as inventory. That 600 Rand will lay there for years untouched. It will be a consolidation journal entry every year when we consolidate until the day we sell that asset. Then that 600 Rand profit will realize. But when we do through use, we must take depreciation into account. Okay. That's enough explaining of the principles. We will carry on with that. I just want to put up the question. Guys, last week we did, I just want to confirm with those that were here during the previous session. We did do question 1, hey? Yeah, we did. Okay. Question 2. Let's just quickly go back to the steps. And I'm referring here especially to exam technique. For any accounting question, you first need to go to the required. Read the required. Pay attention to dates. What's important with dates? What for when? What do they want and for when do they want it? Then it's very important to look at the time. And just through having marked a lot of questions, having spoken to quite a lot of people about exam technique, one of the easiest ways to fail an accounting exam is by leaving a question unattempted. And why don't we attempt a question is because we normally don't finish. We keep on carrying on with a question that we think we can score the most marks in. And we don't give another question a chance to get the easy marks. Each question in accounting has got easy marks assigned to it. Get those marks. Okay. Then with consolidations, very important to calculate the shareholding. Or let's say the investment. In the subsidiary. Okay. Let's go to the question. Okay, guys, like I said, this is a participatory question. I'm going to leave the question up there for 2 minutes. Or let's say 1 minute. We don't really need 2 minutes. Please calculate the percentage shareholding. In other words, calculate the percentage shareholding that the holding company has in the subsidiary. If you are done, you can just raise your hand, use the hand function and just raise your hand. Or if you don't want to attempt or can't attempt, also just raise your hand. It will be an indication for me who is done and who is still busy. Who are still busy. Okay, 100%. Let's quickly have a look. They say Rams Limited acquired its interest in Allo Limited on the 1st of January 2008. So we can say, here's my guys, just give me a moment. It disconnected my tablet. Guys, I've already WhatsApped you the notes that I've just made. Okay. So Rams Limited acquired its interest in Allo Limited on the 1st of January 2008. So on the 1st of the 1st, 2008. on which date Allo Limited had retained earnings of 106,000 Rand. The carrying amounts of the assets and liabilities were equal to the fair value, except the value of land and buildings, which was deemed to be 100,000 Rand more than the cost thereof. The accounting records were adjusted accordingly. So let's not focus on the 100,000 Rand now for the assets. I'll get to that. Let's see what investment we have. So the investment in Allo is 22,500 shares. And how many shares does Allo have? $30,000 shares.
Yes.
Okay. So what is the percentage holding? Justin, or Justine?
It's 75%.
75%.
100%. Okay, 75% shareholding. So we can say that there is a parent subsidiary situation going on here. Okay, so we can consolidate. Any questions so far? Any questions? Guys, you should participate, eh? Don't be scared to ask a question. No one will bother you, I can promise you that. Okay. New. So here they say what the retained earnings was at date of acquisition. But they say the assets and liabilities were all fairly valued except for land, which they consider to be 100,000 Rand more. What do we do with that 100,000 Rand?
Don't we add it as part of revaluation?
100%, but when does that revaluation occur? Before the consolidation or just after the consolidation?
I think it's before. Not sure though.
Just before. Who needs to
Yeah.
revalue their assets? Allo. Allo needs to revalue their assets. So there will be a journal entry just before consolidation starts that revalues land and buildings, and it creates a reserve at date of acquisition. So at date of acquisition, we sit with share capital, we sit with retained earnings, and we now sit with just by show of hands, and you guys can answer as well. Why are we only including equity items? Why do we include equity items of Allo at date of acquisition? Why are the equity items so important? What is the accounting equation?
Assets is, oh yeah, okay.
Equity minus liability. What is equity? It's the same formula. I'm just switching it around. Everybody happy with that? What do we call this? What's another name for assets less liabilities? If you acquire an interest in another company, what are you effectively purchasing? You are purchasing its net assets, and equity is a direct indication of the net assets. So that's why we have to show the equity items at date of acquisition. That is the indication of the net asset value. Everybody happy?
Yes.
Okay. What is, if we think about this, what is, so we sit here with a 75% interest that Rams purchased in Allo. Who owns the other 25%?
Isn't other small businesses?
The NCI.
Yeah, other shareholders, non-controlling interest.
Non-controlling interest. Because what are we doing in a consolidation? We are adding all the assets together of both companies, all the liabilities of both companies. Do you guys think this, if we just go and we add all the equity and liability, all the assets and our liabilities together of both companies, will this accounting equation balance?
No.
No, because we don't. It won't, because we don't own 100% of the other company. If it was 100% shareholding, yes, then it would have balanced. But we don't own 100%. As part of equity, we now create, to make it balance, to make this accounting equation balance, we need to add that 25% NCI to equity. So everything that belongs to that 25% makes its way to NCI and it goes to equity of the group. Hence, all the assets of the two companies, all the liabilities of the two companies will equal the equity plus the 25% NCI. So that's why I always say, and some of you that might have been in my classes in the previous years will know I always harp on the accounting equation, because that proves to me you understand accounting and not a format. So always ask why, because then you don't have to remember. If you understand why, you don't have to remember. Think about somebody that's been driving a car for years. Every time they shift gears, do they look down at the gear knob while they're shifting gears? No, they know where the next gear is. The same with accounting. The more you practice it, the more you don't have to remember it, because you understand it. You understand the principle. It makes sense. Okay, so that's the reason why the 25% NCI ends up in equity. Okay, so share capital at date of acquisition. Go back to the question. Where is there we are. So we sit with 150,000 share capital. Retained earnings, they tell us, is 106,000. at that date, and we know that we had a revaluation of fixed assets to the value of 100,000. So what's that value?
Charles, where did we get the total shares of Allo, the 30,000?
That value. Sorry guys, who asked the question? I wasn't on the screen of Teams. Can you guys hear me?
Yes.
Yes, we can hear you, Charles.
Can anyone just repeat the question?
How did you
I
get the 30? Sorry.
The total shares of 30,000 of Allo, where did you get the shares? Because I'm trying to see on the other screen, I don't get it where and what. I'm a bit confused.
100%. So they say here, ordinary share capital is 5 Rand shares. So remember the 5 Rand shares and remember 150. So we have 150,000 Rand share capital divided by 5 Rand per share. And that gives me 30,000. Everybody happy?
Yes, thank you.
100%. Okay. So we sit with 356,000 at date of acquisition, equity. $25% of it goes to NCI, and 75% of it goes to Rams, who is the parent. Everybody happy with that? 75% of that equals 267. Now we need to determine what did the parent, what did Rams pay for that share in equity? Because that's what it's valued. And what did I say? What is equity? Net assets. So what did Rams value its 75% share in the net assets of Allo? What did it pay?
He paid
So we have to go
180,000.
100%. So we go to the investment in Allo. We purchased 22,500 shares and we paid 280,000 Rand for it. So we paid more. When you pay more than what the net assets are worth, goodwill. Must be recognized. So in this case, goodwill equals
13,000.
Thank you. 13,000. Everybody happy?
Yes.
Okay. Can I ask you guys, I'm going to give you 2 minutes, and we use the hands functionality where either when you are done or if you can't do it, because I'm going to explain it. You use the hand functionality. Then I will know who is done. I want you guys to please prepare for me the journals of at date of acquisition. So debit, credit, what is the journals that needs to be passed to recognize what we have done here? I'm going to go to the information. So just what we've explained now, the journals. What would the journals be? I'll give you guys 1 minute, 2 minutes. Please raise your hands when you are done, or if you're not sure. Okay, guys, let's quickly look at it. Is there someone that wants another minute or two? Okay. Okay, so firstly, just go get that back. Okay. The first thing that we are eliminating, remember these are eliminating journals. We are doing these journals to eliminate these accounts because they have no place in the group. You can't have an investment in yourself or anything like that. We take it to other sections. Like for instance, the share capital. 75% of the share capital needs to be eliminated because it's an investment that we have. 25% will go to NCI, and we will create that. The same with retained earnings, and the same with revaluation reserve. So let's list those three items. Share capital, and this is now of ALO. Retained earnings. Of ALO. The revaluation reserve. Of ALO. That we need to eliminate. Remember, before you do any journal, you need to understand what needs to be debited and what needs to be credited. You have assets, equity, liabilities, income, and expenses. Assets increase on the debit side. All three of these items are equity items. They need to be reduced, so we debit them. Then there are some other things that we need to eliminate as well. The one thing that we need to eliminate is the investment. Remember, Rams has got an investment in ALO, so we eliminate that investment. And what is the value of that investment? 280,000. Then we said we need to create a space in the group's equity for the NCI, the non-controlling interest, that 25% portion. So if I need to create a reserve, I'm creating something that is equity. So if I look at that table that I've just given you, equity increases on the credit side. So I'll say NCI, and this is in the group's books. And what was the value of that NCI? In other words, that 25%. What is 25% of 356?
$76,000.
Just check again.
Oh yeah, my bad. It's 89,000. Sorry.
There we go.
It's 89,000.
100%. 89,000. 89,000. My debits and my credits, are they balancing at the moment?
No, they don't.
No, because they shouldn't balance, because they are out with the goodwill that was created because we paid more for that net investment in the subsidiary. But we can only recognize that goodwill in the group's books, because you cannot recognize internally generated goodwill. That's an accounting principle. You can never recognize internally generated goodwill. But if I purchase another company and I pay more for that company than what that company is worth, that more part will always be goodwill, and that's an asset. And if I work with an asset increases on the debit side. And now that journal should balance. Everybody happy?
Yes.
100%. Okay, let's look at some of the other information that was given. Let's move along a bit. So, yes, Makaton.
Sorry, Charles.
Yes, Makaton.
No, it's okay. I unmute myself by mistake. Sorry.
Okay, 100%. Let's read number 2. They say, since Rams acquired its interest in Allo Limited, so since the beginning of this relationship, Allo Limited has purchased all its inventories from Rams Limited. So they say from the beginning of this relationship of A having an interest, why am I saying A? Rams having an interest in Allo, Allo has been purchasing all its inventories from Rams. So my question is, which one of those two are sitting with unrealized profits?
I think it's Rams because Allo is purchasing from Rams.
Exactly. Rams is the company that's making the profit. So Ram is the one making profit. And that profit equals unrealized profit. Why is that important to know? Because you need to know whose profit, whose cost of sales, whose sales and whose inventory, whose retained earnings you need to go and adjust. In what way? Okay, that's the main thing that you need to know here. Who paid more for the inventory? Allo. So Allo's inventory accounts needs to be adjusted. Allo's inventory value. Rams sold it for more than what it's worth, or well, not more than what it's worth, but more than what it should have. If we look at it from a group's perspective, you can't make profit within yourself, so Rams sales would have been affected. So you guys see how important it is to understand the principle. Let's read the information further. On the 1st of January 2014, Allo Limited had 60,000 Rand worth of inventory on hand. Okay. Rams Limited sells all inventories at cost plus 20%. Inventories to the value of 12,000 was on its way to Allo Limited at 31 December 2014. So now we need to calculate the unrealized profit in closing inventory. They give us two inventory values. They give us the opening and they give us the closing. Because those are the two that we need to be concerned with most in terms of the inventory value. Let's look at the information. They say on the 1st of January 2014, there was 60,000 rands inventory on hand. Okay, so we say here there was 60,000. What is that 60,000 rand made up of? It's made up of the cost to Rams, which is X plus 120%. Everybody happy with that?
Yes.
Okay, so if I say it's on cost and I say X plus 0.2X equals 60,000, what is X? Can someone calculate X for me?
$50,000.
Hey,
That's 50,000.
let's see. So we say 1.2X equals 60,000. So that means X equals 60,000 divided by 1.2. And that answer is
50,000.
50,000.
another way to check if you are doing it in the right way. You say cost price, profit, and selling price. They say they take cost price, which is 100, they add 20, and they get to the selling price of 120, which equals 60,000. So if you divide it upwards, you have to work back. It gets you to the same answer. Just want to double check that answer though. Just give me a moment. My calculator. Are we reading this right? Rams Limited sells its inventory at cost plus of 20%. Just gonna double check something here. No. I'm happy with that answer. So the unrealized portion is 10,000 Rand. Everybody happy with that? Okay, so they say that is a 60,000 inventory on hand. Rands Limited sells it, then it 20%, and then it says inventory to the value of 12,000 was on its way to Allo. Okay, so what is the closing? So we know when we did the stock take, Allo wouldn't have counted the 12,000, correct? So we already know it's the 12,000. But what is the closing value? Because I say, since that relationship started, Allo Limited purchased all its inventories from RAM. So that means that 84,000 was only purchased from RAM. Everybody happy with that? So 84.
Sorry, Charles, can you please explain that part again?
100%. Okay, let's read the information first. At number 2, it says, since Rams Limited acquired its interest in Allo, in other words, since the beginning of this relationship, Allo has purchased all its inventories from Rams. In other words, inventories will only include inventories purchased from Rams. Then it gives us the opening inventory of 60,000. And they say at year end, at 31 December 2014, at year end, 12,000 Rands worth of inventories were still en route to Allo. In other words, it already left Ram's premises and it's on its way to Allo. So now we have to go to the information that's given that says here's the values as at 31 December 2014. So I know because of the information saying that Allo purchases all its inventory from Rams, that 84,000 could only have been purchased from Rams. Are you happy with that, Clina?
Yes,
Okay, so now I'm saying the closing inventory is the 84,000 that's on the premises plus the 12,000 that's still on its way to the premises of Allo. In other words, we are sitting with a total closing inventory of
96,000.
and that is at 120%. So what is 100%? What will 100% be? So you take the 96,000, you divide it by 120, and you multiply it with 100 and you get 80,000. Meaning that the unrealized profit in closing inventory equals 16,000. Now, just something to think about because we're going to get to that in a bit. If I look at those amounts, what part of which one of the opening or the closing's unrealized profits would have realized by now? In other words, what inventory would have left the group first? Opening inventory or closing inventory? It's not a trick question. Just think logically. The opening inventory. Because when the year started, I had unrealized profits of 10,000, and then the whole year happened. I purchased and I sold. I purchased and I sold. And that kept on until at the end of the year, I got to my closing balance, meaning that 10,000 Rand I would have sold to people outside of the group first. Are you guys happy with that? Because
Yes.
remember, this 10,000 Rand was still made because of Rams selling to Allo. So that 10,000 was still locked up in the group. But during the year, as I bought and I sold and I bought and I sold, I would have obviously sold the 10,000 Rand first. So the 10,000 can now be realized. But the 16,000, that will now be unrealized profit. The 10,000 was unrealized profit in opening, meaning it was unrealized profit in the closing of the previous year. But at the end of the year, this 10,000 would have realized. So I'm going to say here. But at year end, opening stock would have been sold and thus unrealized profit would have realized. In other words, the group can now say, I've made 10,000 Rand profit. Before that, it couldn't have said that because that 10,000 was still locked up inside the group. But the moment I sell it to people outside the group, then I can say I made a profit. Think of your house. If you sell something from room 1 to someone in room 2, did the house make any profit? No, only when the person in room 2 sells it to someone outside of the house, then the house would have made a profit. Think of it as the same concept here. Okay. Let's go back to the information. Okay, so we dealt with number 1, we've explained number 2, number 3. The following decisions taken by the directors of the companies must still be accounted for. Another very important exam technique is to read properly. They say the following decisions taken by the directors of the companies must still be accounted for. 5,000 Rand interest payable by Allo to Rams. That must be eliminated. You can't pay yourself interest. And you can't incur interest in yourself if you look at it from a group's perspective. When you do Allo's books and when you do Ram's books, yes, then that 5,000 must still be accounted for. But we are doing the consolidated statement of financial position. Everybody happy? Anything that I make that is profit or loss within myself, I must eliminate. Even that last one, a dividend of 10% per share must be declared by both companies on 31 December 2014. No entry in this regard was passed by any of the companies. But they say must. In other words, it's already been declared, so we must make that entry. But very important to read properly. They say no entry in this regard was passed by any of the companies. Everybody happy? Okay. So what do we do now? They ask for draft the consolidated statement of financial position of Rams Limited and its subsidiary at 31 December 2014. The statement of financial position. It's a format. You must be well versed in what the format looks like, because you can already draw your skeleton. Okay. Let's go to the people, and the things count marks, so you must write the stuff correctly. So let's say, it's say Rams Ltd and subsidiaries. Consolidated statement of financial position as at 31 December 2014. What does a statement of financial position look like? We first have our asset section. And we already have the information, so we know what must go in there. Just the skeleton, no amounts. Can I ask you guys to please draw up the statement of financial position? I'm going to mute, and then I would like you guys to please draw up the statement of financial position. You have all the accounts. And that is something that you guys should be very well with at this, good at by now. I'm going to mute for 5 minutes. Does anyone else need another minute or two? Guys, just a reminder to please post your student number in the chat section and to please complete the attendance register. It's extremely important for the attendance register, especially because it influences the statistics and all of that. So please complete the attendance register, and if you haven't done so yet, please post your student number in the chat section. Okay, let's get back to the question. Okay, so let's look at the statement of financial position. Non-current assets, we have property, plant, and equipment. And we get that by adding the two together. I don't know what happened there. I think that 400 Rand should be down below. I think there was just a typo there, guys. So it's 400,000 plus 500,000. And that gives me 900,000. And then what other non-current asset should we recognize? Don't forget about the one that was recorded at date of acquisition. Goodwill is a non-current asset. $13,000. So if I add those two together, get 913,000. Everybody still happy? Then under current assets, we have trade and other receivables. There were no intergroup transactions with them, so we will just add them together, whatever there is. Let's just see, trade receivables, 35 and 56. 35 and 56. And that gives me
91,000.
Thank you, 91,000. Then comes inventory. Guys, and in the exam, you by now know that there's something up with inventory, but you don't, and you might have gotten confused with unrealized profit and what needs to be deducted and all of that. Please get the easy marks first. The easy marks will be the marks by just adding the two together. Just add them together to start with. 60 and 84. They already have marks. Now you must remember something else that was in the information. They said 12,000 was still on its way. So plus 12,000. Everybody happy?
Yes.
Now we go to the stuff that we calculated. There are still unrealized profit of 16,000 in closing inventory. Minus 16,000. What does that total to?
140,000.
100%. And if you add all of that together, you get 1,144,000. Equity and liabilities will be the other new section. Because you need to split equity between the owners of the parent and NCI. Okay, you have to split it. Owners of the parent will get share capital. That will just be RAMs. Then there will be other components. And then there will be retained earnings. Let's look at the information. We have ordinary share capital of 200,000. So that's 200,000. Other components will be anything else that's not retained earnings or share capital, and there's only one. There's the revaluation of land and buildings. And retained earnings we need to calculate. Let's look at the information. They say here distributable reserve, retained earnings. Then we have long-term loan, we have investment. Is there anything else that I'm missing? I just want to check something here. Okay, they give you the ordinary share capital, revaluation. Oh, yeah, this is the distributable portion of retained earnings. So if you have to start with the retained earnings, let's look at the calculation. Just going to say here, Calc 1. I'm just making a reference to calculation 1. So calculation 1, we say, let's start with the given information. The given information is the 266,000. Agreed. Then they say the following has not yet been taken into account at number 3. Okay, so we say, and remember it's not yet taken into account, so we need to take it into account. Then they said a dividend of 10 cents per share still needs to be calculated by both companies. We will have a dividend receivable and a dividend payable. The dividend receivable will be the 150,000, will be the 30,000 shares of Allo times the 10 cents times 75%. Everybody still happy? Dividends payable let's look at the ordinary shares. There are 200 in RAM divided by 5 gives me 20,000 shares. So it's 20,000 shares times 10 cents. And that gives me 1,000.
I'm sorry to disturb, but 200,000 divided by 5, it's supposed to be 40,000, not 20,000.
See, it's that time of the evening. Thank you, Tiki Lady. And then there were unrealized profit in the closing inventory that we already calculated, minus 16,000. What will that total be?
253,250.
Okay, so that is rams. What will allos be? We can calculate allos. With allo, the trick is you need to remember that we can only take into account the retained earnings since we became part of the relationship. So what is the at date? The retained earnings equaled 106. You guys still remember? At date, it was 106. Now, if I look at that information that's given, I see, but at the end of the current period, it's standing at 174. So what is the move? What is the movement? $63,000. And the only thing that needs to come to that you must remember there is that is the total is 63,000. So times 75% equals and then we had a dividend that we had to pay of 2250. Remember, this dividend receivable in Ram's books will be a dividend payable in Allo's books. So total retained earnings will be the 45 will be the 45 and the 253,250, and that will equal 298,250. Everybody happy? So it's a 253 plus the 45 gives me the 298,250. So it's basically Rams plus Allo since the relationship started equals 298,250. Rams were 253,250 plus 45. Okay, everybody happy? So I can go and slot that in. Now it's the NCI.
Sorry, Charles.
Yes.
When you're saying 106,000 minus 174,000, it gives me 68,000.
Ah, sorry, it was just a writing mistake. No. I'll just make 100% sure. I'm just recalculating quickly. It is 68,000. Just want to double check because then something won't balance here. So 68,000 times 75 will give me 51 if I'm not mistaken.
Yes, it's 51,000.
And then this will be 47.
48.
48.
7,508.
Just want to add that. Plus you guys happy?
Yes.
Guys, I see our time is up because I'm moving into another class. Can I ask you guys to please complete the question, send me the answer, and then I'll mark it for you. And then I'll send you the answer back in the group. Can we have that agreement? Yes, Justine? Justine, do you have a question? I will send you guys the question. I will share it over the group. Guys, thank you very much. Please make use of the one-on-one consultations. Please go through this question again and the explanation. I will send you my notes and stuff up until where we are now. I'm going to make a note here and I'm going to say, please complete And then I'll save and I'll share it over the group. I've sent it, and then I'll share the question in a bit. Thank you, guys. Thanks for participating. I really appreciate it. I need to run to my next session. You guys must have a wonderful evening, and please make use, like I said, of the one-on-one consultations.
Thank you, Charles.
Thanks, guys. Please leave your student number and sign the attendance register, those that haven't done so yet.
Charles, I just want to check with students if they have received the email with the form to the request the consultations. Ja, val ek kan ook oor my woorde.
Adele, I did ask in the beginning of the session where there were quite a number of students, and I've asked them to either send me a WhatsApp if they didn't receive it, or they must make use of that email.
And many students that I asked in the other classes now said no in the beginning until I said to them it's impossible. And then after 5 minutes they say, is that the one that says book your consultation now? And I said, yes, that's the same email. So just make sure that you see spot the right email. Thank you. Thanks, Charles.
Thanks, Adele. Thanks,
Oh,
guys.
sorry, Charles. Charles, I
Yes.
just want to ask something. I just found your class in the middle, and I don't know what's happening. I don't know your classes for the first time. Can you maybe just tell me what must I do to attend your classes? What need to be done, or you can send me.
I'm going to send you my. Let me write you my. I'm giving you my email address. My WhatsApp,
Okay.
the WhatsApp number. Send me a WhatsApp
Okay.
with your module code, and I'll answer you on that. Is that fine?
Yes.
100%. I'll send it. I'll leave it here in the chat group.
Okay. Thanks.
Just check the chats. I've posted
All right.
it now.
Yeah. Thank you.
Here we go. Thanks, guys. Bye-bye.